Hey there everyone, the CPI came out today, and for all items came out at 0.5 month over month, which is incredibly high, and in my opinion, it annualizes out to 6%, and well, that's much higher than we want. And then for a core, came out at 0.4 month over month, which I expected to be also high. It is a little bit more resistant than all items where you have food and energy, so that's most definitely something where, I'm not so surprised that it didn't go up as high as we did, or as we saw for all items. I do want to pick apart the CPI. I want to talk about what we saw in the markets and why I believe it moved the way that it did. And then finally, what do we see happening with the market going forward from here? I do want to say that February, I've already updated my spreadsheet, and I already have some commentary that I'm putting together for that. That's going to be released as a Patreon exclusive. If you would like to be part of my Patreon, you can find that link down in the description. So go ahead and take a moment, take a peek at that, click sign up, and come join us over there at the Patreon. You can join the private Discord in that community and listen to more of my commentary and also see more of my research. I would absolutely love to see you over there. All right, we got to move on, guys. So with that said, I'm Dr. Stock, Doctor of Education. Let's get right into it. So here I have highlighted for you 0.5 for the CPI for month over month for all urban consumers, for all items for the month of January. And that's against December's revised value of 0.1 month over month. And that is still a pretty incredible jump to move from 0.1 back up to 0.4. That's in the direction that we don't want to see inflation go. Now, the markets, I thought, would respond negatively to this. And for at least a little bit of time, they did. We were actually in the red, in the SPY, in the NASDAQ, in the Dow Jones. And man, oh man, what a roller coaster. And I can't, between the roller coaster of a stock market ride that we've had today and the fact that it's Valentine's Day, it reminds me of that song, Roller Coaster of Love. Say what? I don't apologize for singing. You guys are all welcome for that moment. And please, I hope it sticks with you. And maybe it's an earworm that you'll keep singing it yourself. Enjoy your Valentine's Day. So that led to 6.4% year over year before seasonal adjustment. And the important thing there is actually kind of a little bit annoying because December was 6.5 before seasonal adjustment. And then moving to January, it says 6.4. And you get all sorts of headlines that say that inflation actually came down a little bit from December to January. And well, we know it didn't. We saw the month over month number. It does look like that happened, but that's something that can be masked by those year over year numbers. As a matter of fact, I think that we could have even had a read of 0.6 and we still could have come in at a number that would be either just below or equal to what we had in December. So inflation could have been even a little bit hotter yet. Now, that gets even more astounding when you go to February. I'll share that spreadsheet, like I said, over at the Patreon. It'll be there first. And after I finish my full analysis and share it with my patrons, I'll also bring it to YouTube and give more of a summarized version of it. But if you want those details, like I said, they will be over at the Patreon. Moving on from there, we have 0.4% for core, for CPI, for the month of January. Again, neither one of these things annualize well. And I went on a long time about it. You can look back at my other videos that I have on the CPI for January. And I really thought that if we came in at or just above consensus that the market would drop. And the market didn't do that. The market raised anyway. And why do I think that happened? I think that this is more the important part of the video. I think the markets moved up because of the whole fear, uncertainty, and doubt thing. We were afraid at what the market could come in at. Honestly, we were at a point in the markets where we could have gone either way. We had room to move up in the SPY, in the NASDAQ, and, well, we did for a time. We also had room to move down, and, well, we did for a little bit. And as of the recording of this video, well, the market has just closed. Actually, wow, incredible. So the NASDAQ finishes at close to 0.6. It's 0.57 is where it closed out the day. The S&P closes out at 0.02, so pretty much even. And then the Dow Jones down about 0.5%. So, wow. All right. So at one point in time, all three were up. At one point in time, all three were down. At one point in time, all three were even. Like, it was crazy to watch that take place. But back to the CPI and why I think it happened. The fact that we were near expectation and the fact that Jerome Powell said that we would see inflation for a while longer and it would run a little bit hotter than expected for a little while longer, well, and then it did. So in my opinion, it actually meets expectations. And so since we got a report that doesn't really lead to more scariness, at least not off this single report that we have here, the markets were able to feel a little bit of levity from that. They were able to be pushed up a little bit, but then there were also times of doubt where they actually came back down a little bit. We had the Fed come out and talk today and say that there might be further rate hikes happening. So we already kind of knew that. Jerome Powell already said that. So because we didn't really have a lot of information that was really new to us, even though this was not a good CPI print, in my opinion, the markets, they did okay. And that's surprising to me. I thought that there would have been a bit more of a sell-off given the results that we saw. In the pre-market hours where there's low volume, pretty much anything can happen. I don't put a lot of store in what we see during the pre-market hours. And then when the market opened, then I thought that we were seeing the drop that I expected to see. And then we were seeing it up again. Like I said, just entirely crazy. I do want to move on from there. So I do think, in summary, that the market moved up from CPI because we got answers. And it was the goods have come down, services are still up. That's what we have. So I'll scroll down here just so you can see those values. So when we look at services, less energy services, still up at 0.5, and that's very similar to what we saw, 0.5, 0.5, 0.6, 0.5, ever since October. We had that high print back in September of 0.8. So that's something that was already expected. So even though it's higher than we want, it's still, like I said, expected. And then we looked at shelter, and even all the way across for this one, 0.6 all the way up to 0.8 and somewhere in between, and that's where we landed, was somewhere in between at 0.7. And Jerome Powell tells us that will likely last for the first half of this year, so it wouldn't be until the second half of the year that we really see that come down, as it is such a lagging indicator there. Transportation services, that one was a bit high, so I think that's also something that we need to pay attention to. It was more than balanced what we got, though, with medical care services at negative 0.7. So overall, it just, even though it was a higher print, I think it was something that we expected, something much lower, and it came in this hot. Well, then we'd be much more surprised that inflation was much worse than expected, and it would drop down from where it's at. I think we would have seen something in core more like 0.5 or 0.6. I think that would have been more calamitous, certainly more so than what we saw in the markets today. So where do we go from here? Well, we got our answers for CPI for right now. Like I said, I have the spreadsheet already updated for February, just for the projections. That is less my overall analysis of it, given some of the other factors that I'm going to bring into it. And like I said, that full write-up and that Patreon exclusive video will be available within the coming days over at the Patreon. So like I said, if you want to join that, come over and see me. We'd love to have you over there as part of the community, and you can enjoy more products, services, and commentary from yours truly. Tomorrow at 8:30 a.m., we also have information coming out from retail sales for month over month, and we want to watch that for further indications of the state of the economy, especially in reference to GDP and with the New York Empire State Manufacturing. Really what we're looking for, if I'm going to generalize this for everybody, is I'm going to say that we're looking for the strength of the consumer. So even though inflation might remain high, is the consumer also going to remain strong during this time? That's part of it. So can the consumer hold out? Honestly, I don't think the consumer can hold out through extended inflation. And I think that's something we're going to start to see that weakness as we get revisions possibly of Q4 GDP, but certainly once we start to get the first estimate or the advanced estimate for Q1 for GDP and the earnings reports coming out of Q1, I think that is really going to be a turning point for the market. So we want to watch that happen. Now, something that I think is actually going to be very big for us are the Fed minutes that are released on Wednesday at 2 p.m. So that is something that when it comes out, we want to be on the watch for that. We want to be picking apart the information as fast as possible to see what the Fed talked about at their last meeting that was January 31st and February 1st. And we're looking for signs of what they're going to do in their summary of economic projections following their March meeting. So we need to keep track of these things and keep building up that story for what the Fed is going to do next, how long they're going to keep up their quantitative tightening cycle, how long until they pause, and how long until they start to cut rates, which right now, rate cuts, I believe, are expected out as far as 2024. And so we're going to have to watch that. Hopefully we get signs of cuts sooner. If we get signs of pause or rate cuts sooner, that could be something very bullish for the markets moving on from there. Then Thursday, we have PPI coming in 0.4. month over month is what the consensus is, 0.3 for core PPI. And so I think if we come in near those values, I don't think that's going to be as big of a catalyst for us. We want to keep watching the producer prices because the consumer can end up paying overall for that. And that can be a sign of further inflation that's yet to come. Goods prices have been coming down. Service prices have been holding steady. And we want to watch out for any signs of that narrative shift in PPI when that comes out. I think the big thing, though, coming up on Thursday, February 23rd, is the second estimate for GDP. So that comes out at 8:30 for us on Thursday, February 23rd. I think we want to keep our eyes on that to see any changes. Was Q4 stronger than we thought to close out 2022? Was it weaker than we thought, or was it about right? Currently, consensus sits at about 2.9, which is also the current read that we have from the advance estimate. So as of right now, consensus doesn't think that there's going to be any change. We'll watch and see if we come in stronger than that. That can be very good for the markets. So watch that number. If that comes in weaker than that, that can be something that drags down on the markets, especially if it's something that we think carries forward into Q1 of 2023. So here we're looking at the SPY, and here you can see that the long wicks that we have on this candle, the narrow body of this candle, and it was just a crazy up and down volatile sort of day in the markets. And we actually ended up closing close to even with the previous close anyway, just a little tiny bit down in the SPY. So here we're looking at the Qs, and well, it kind of sits right along this little line I drew in one of my previous videos, and closed there, sat there, and that's exactly where it's at. The CPI was not enough of any sort of catalyst to move it up to any level of real significance, in my opinion. So what do I see happening with the markets from here? Honestly, February has the potential to be a pretty good run. We're going to have to watch that take place. We have to watch for news on the GDP. We also have to watch for news on the consumer. Weakening in either of those two areas, and they are related to one another, is going to be something that could cause weakening in the markets. We also want to watch jobs reports to see what's happening there, to see if it remains tight as it is, and to see if it's going to push inflation further. Honestly, we could be okay up until March, possibly even as long as through March. However, I think that earnings are going to tell us a different story when we start to see those come out for Q1. And when we start to get that advanced estimate for GDP for Q1, I think that that's potentially an area where things could get scary for us. So we're going to have to watch that. February, CPI is out. Market's okay so far. So we're going to have to watch and see how the month finishes out as the other economic reports come out, and see if there's any other catalysts that we have in there that are going to move us, such as GDP, Fed minutes, personal income and outlays with the PCE. And then we also shouldn't forget about things like retail sales and also the manufacturing indices that are reported. We want signs for that economic contraction, any signs that would tell us about any sort of weakening or strengthening in the economy. So keep all that stuff in mind. I'll keep bringing it to you, reporting everything that I have for you to talk about the overall markets and the direction that we see them heading in. Please be on the lookout for the earnings season in Q1 and the forecast, the results and the forecasts for those companies for the outlook for the rest of 2023. Thank you guys for listening. If you would like to see more of what I have to offer, like I said, down in the description, go ahead and click that link for the Patreon, sign up and join the community. It's growing fast and I'd love to have you be part of it. And I look forward to providing more services and products as we continue here with this journey here on YouTube. Also, don't forget to like and subscribe if you haven't already. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.